Hey, so glad you are with us on Conquering Retirement. Brad Johansen with Northern Alliance Financial, Lance Gilman, CEO, Blake King, CFP. Gentlemen, we're back at it again.
Here we go.
Here we go, folks. The idea is get bigger, get better. Really, it's get better, but just with that, it's getting better. You guys are getting new offices, moving and expanding and growing.
Yeah, actually, in the last year or so, we've actually got our certifications to be TIAA advisors.
Nice.
And that's in a lot of the university systems. So our presence kind of is expanding through all of the University of Maine campuses, as well as kind of a reach up north, which is way far near Canada, Madawaska.
Nice.
Yeah, so we've been doing some seminars up there. It's kind of exciting, and a lot of activity, a lot of excitement coming out of that, which is awesome. And we can service another body of retirees potentially through the university system through that TIAA certification. So if you happen to have TIAA and that's your custodians, then we've opened that box up as another tool to be able to help people. And so that's huge. And then the other thing is that our office in Saco, 190 Main Street in Saco, which is just across from Red's Eats, which I know you're big on, Brad.
Big on Red's Eats.
Yeah, chili dog, baby.
Gotta have one.
Hey, we're probably going to be moving that office within the next 6 months or so, just because we're dealing with some parking issues there.
Okay, and then you're also dealing with more reach out in what most folks are on in social media, and you're adding some of that, and you're adding bodies to that as well, right?
Absolutely. So we hired a social media and marketing specialist, Bella, who is a rock star.
Yeah, she's great.
Yeah, she's awesome. She does all of our social media forecasting, does a lot of the TV integration, show content, that kind of stuff. But she's also doing particular content pushes to like Facebook, Instagram, YouTube, and LinkedIn. She's everywhere.
Yeah.
So she's a rock star, and she's doing all of our marketing initiatives as well. So a lot of client correspondence. Just been a really, really awesome addition for the team.
Well, good. Getting better is nice. When the getting bigger has to get bigger, it's nice when it's getting better as well. Is the big beautiful bill better for you? Let's get into the BBB and see if we can kind of map out whether or not there are some things. As I'm doing that, we always try to create something that's a little bit more simple for you. And the big beautiful bill will deal with a whole lot of taxes. So why don't we put up naftaxtest.com? What is this? Well, it's a tax calculator that Lance and his guys have put together to give you an idea of all the money that you've socked away in those qualified accounts. What am I qualified for? You're qualified to pay more taxes. That's what the problem is. And this calculator will give you an idea with all that money that you have tax deferred and what Uncle Sam wants for it in pieces at the beginning, at RMDs, at passing it on to the next generation, and what some of the strategies on the other side may do for you. I apologize. You can't unsee the number, but the idea is the earlier you get going, the better. So scan the QR code on your screen, naftaxtest.com. You can go to the website. We'll leave it up there for you as we talk about the big, beautiful bill. What is there a general start, Blake, on what we need to know on what's changed? You probably have a long list on what's changed with the big, beautiful bill. Give me a start.
I'd probably say the biggest beneficial and monumental things to U.S. consumers is that they extended the Tax Cut Jobs Act indefinitely. So I use air quotations on indefinitely because who knows when the next legislation comes in.
It's permanent until it's not.
Correct, exactly.
Until it's changed.
Exactly. And so what happened with the Tax Cut Jobs Act, that was actually implemented in 2017. and they lowered 5 of the 7 marginal tax brackets, right? And that was expected to sunset at the end of this year.
Right.
But what the One Big Beautiful Bill Act said, hey, we're going to continue these low tax rates in this low tax environment for the indefinite future. So what do we need to do? We need to take advantage of the situation at hand and utilize the lower tax brackets while we can. You know, we need to make good or make hay while the sun shines. So that's probably one of the biggest things that is advantageous for a lot of U.S. citizens.
And timing on that matters. So, and we say this all the time. Why don't you play with the rules that you know you have now? Because we do know the rules are going to change. So in the midst of that, that gives us a longer runway tax-wise to try and figure some strategies out, yes?
Yeah, absolutely. Because originally, when the Tax Cuts and Jobs Act was originally passed, it had a sunset period. So now, basically, they say it's permanent. It's like women get a permanent, right? They say, well, it's not permanent. Why don't they call it temporary, Brad?
Yeah.
Well, probably because they're not going to sell temporaries. Permanent sounds good, though, doesn't it? But the original Tax Cuts and Jobs Act was supposed to sunset in December of 2025. And so what happened with that is it lowered 5 of the 7 marginal tax rates to the lowest level we've seen in like 4 decades. And so it gave us a window of opportunity to look at things like Roth conversions. In other words, if taxes are lower or the lowest they've been in 40 years, well, maybe we can take some money out of this big bucket we have in this qualified plan, pre-tax, and lower that, convert it into a Roth over the time that we have until the Tax Cuts and Jobs Act sunsets in December of 2025, and we'll convert whatever we can without pushing us into a new marginal tax rate during that window. Well, when they passed this new legislation, they said, this is permanent. We're extending this Tax Cuts and Jobs Act reduction of those marginal tax rates indefinitely. So now you're right, it's given us a longer runway to start saying, okay, we've got a little more time, at least until they change the rules again, to make some of these adjustments.
Give me an idea on the Roth. So if you're going to naftaxtest.com and you're scanning the QR code and you're finding this out, and the numbers are drastic on either side of the page, nobody wants to pay taxes now. But the idea is Uncle Sam is going to get its piece of you in all of these qualified accounts. Is Roth right for everyone is what the question then becomes, or is it simply right for a majority of people who have an option to try and do some conversions, even contributions now with later conversions? I'm probably mucking it up to the point of saying, is Roth right for everyone? I'll leave it at that.
Well, it depends, honestly. Do I find value and advantage of having a Roth bucket in a retirement plan? Absolutely. And here's the reason why. Traditional IRAs are, in theory, supposed to be taxed when you take money out. And you are subject to what's known as required minimum distributions, meaning at age 73, you got to start pulling money out of the account. But if you take advantage of conversions and making contributions to Roth monies, that money is never going to be taxed again. But guess what? You're not subject to required minimum distributions on Roth monies. So a potential planning strategy is, hey, we've got traditional monies in Roth. Let's get this cash flow now from the traditional monies so that in our later years, when we potentially know that tax brackets are going to be higher, maybe those are the years where we pull money out of our Roth and suppress our income so low that we may not have any taxation.
Yeah, the other thing that's kind of critical about this, no matter how much money you have, if you don't have any Roth money, well, it's an opportunity to create another bucket. As Blake was saying, we like to have options, right? And it's nice to have, if all of your money is in qualified pre-tax money and we don't have any Roth, absolutely, we need to take a look at this. The next question is this: if we take money out of the Roth, how are we going to pay for the taxes on that conversion? Let's say we can take $20,000 out of that money and keep within the same marginal tax rate at the federal level. Okay, well, let's say our marginal tax rate is 12. okay? And so we can go up $20,000 and still stay within 12%. How are we going to pay for that 12%? Well, you've got options. It's good to have options. If you've got extra money sitting in just a bank account or savings account or CDs or something, highly liquid funds, that's not going to mess into your emergency savings funds, then you could pay for that, let's say $2,400 out of your savings. But if you don't have that money, the other option would be to take the money out of the qualified bucket that you have, your IRA or your 401k. You could just pay for that out of that chassis. The idea being it would be preferable to take all of that money, the full $20,000, and get it into the Roth and pay for the taxes some other way, because then you've got that full $20,000 now in the Roth. But if you don't have that extra money, you can pay for that conversion right out of the qualified bucket.
Options are good. And the question is, have you even looked at your options? So NAFtaxtest.com, if you scan the QR code here, this will give you an idea. It's very quick. It's user-friendly. And then you're going to want to make a call to say, I saw some numbers. They shocked me. I probably need some strategies. Can you help put together a complimentary written financial plan for me? And with that, copy of the book, Conquering Retirement, that Lance has penned, 877-241-7430. It all comes back to, do you have a plan when the rules change for what they are now and what potentially they could be? Do you want options? Do you want some help from experts who've been doing it for decades? 877-241-7430. Don't waste the time. Do it now. Be right back.
I got pulled into the financial advising space back in 2011. I started my career in Kansas City, Missouri, just kind of progressed throughout the industry and ended up getting my certified financial planning professional designation. And when I left Kansas City, I moved to Maine, and now I'm here with Northern Alliance Financial. What pushed me in the direction of the financial planning side of things is throughout my life, I've been really good at math. I've always been kind of a people pleaser, as well as just really caring about people intentionally and wanting what's in their best interest. And so it was really just a harmonious fit, using my math skills as well as my ability to relate to people and be empathetic with them in their situations. I want to be able to get to know them, find out what their hopes, dreams, and wishes are, things on their bucket lists, to see if we can make that come to fruition. And so it's really about building a good long-term working relationship. So I take a vested interest in my clients' interests as well as their passions, and I really just try to help whatever it is they're trying to accomplish, utilize the resources they have to their best of their ability.
Hey, glad you're with us on Conquering Retirement. Brad Johansen with Lance Gilman, Blake King. Conquering your retirement. It's hard when the government changes the rules. So we're talking about the big, beautiful bill and the rules that are changing in that. We talked about Roth and moving stuff over. Should we mention the 529? What's the situation with 529 and what happened with big, beautiful bill?
Yeah, so with the 529, essentially what that is a college savings account.
Yeah.
Right? You put money in, it grows tax deferred, you pull money out, and if it's used for education, you can take those withdrawals tax free. But what happens if you've got a rock star of a kiddo, right? And they've got all of these scholarships and benefits and things like that, and you don't need to touch that 529 money. Well, how the laws were written is that if you touch that money, not for educational expenses,
Right.
you'd get hit with taxes and penalties.
Okay.
Well, what the one big beautiful bill said is, hey, you can actually convert those 529 monies into a Roth IRA for the child that you created the 529 for. Now, it's subject to the maximum contribution amount of, I think, roughly around $7,000.
Yeah.
So you can convert 529 at $7,000 a year into a Roth bucket for your kiddo. And what's really powerful about that is you're starting them at a very young age for retirement planning. And depending on how sizable that 529 is, and you do that sporadically throughout time, they could have a serious tax-free nest egg even by the age of 50.
Yeah. Strategies. It's thinking ahead. It's trying to figure it out. All right, let's go from the kiddos to the senior deduction. The above the line deduction, senior deduction, what are we talking about?
Yeah, so this is an above the line deduction. So it adds, so let's say the standard deduction is $25,000. It's an additional $6,000 per person. So that's above the line deduction. So it comes right off the top of your taxable, your marginal tax rate, like what you're going to be taxed on, comes right off the top. So the standard deduction was changed actually with the Tax Cuts and Jobs Act as well, bumped it up and kind of eliminated a lot of the itemizing because most people don't get to 25,000 or greater in itemized deductions. So it eliminated a lot, it simplified the tax code. But now the senior deduction added another 6,000 per person, another 12,000 per person. And if you're over 65, another 2,000 per person above that.
Yeah.
So what this is doing is giving opportunities maybe to look at more options for Roth conversions as well, because again, what we're doing is we're taking an additional $14,000+ per couple off the table from taxation.
How about that?
Mm-hmm.
Nice
That's
movement.
pretty good.
Okay,
Pretty good move.
There's some positive.
Yeah.
What do we need to look at as we talk about what we're moving into that has been, is there something that I should be paying attention to that could cause me detriment? And I'm throwing out a huge ball of wax because there's so many things in this bill. Something that I first have to pay attention to. I've talked to the kids, I've got the senior stuff. Is there something else that I need to pay attention to immediately?
I think the other thing that you really need to pay attention to is projected income flows, right? One of the things that you really want to be aware of is you may look at your Social Security benefit statement, you may look at your Maine PERS pension benefit statement, right? And right now you may be in a lower tax bracket because you have all these deductions, but when your pension starts kicking in and now you have Social Security benefits and you have this nest egg, we can actually formulate or hypothecate what your cash flow is going to be in retirement to see if you're actually going to be in a higher tax bracket.
Yeah.
If you are going to be in a higher tax bracket, what can we do now to make sure that you are in a more appropriate tax bracket in retirement so that you can hold on to more of your IRA dollars? So we have the ability to forecast that out 20, 30, 40 years into the future.
Forecasting is good.
Yep.
You mentioned some car stuff. Car loan deduction, is there?
Yeah, that came out of kind of nowhere.
yeah, that was an interesting one.
Well, the thing about the car loan that I find interesting is that it's the first time that I've actually heard an initiative like this about car loans, but one of the things that they emphasized in it, it's like a $10,000 deduction for both itemizers and non-itemizers. So either way, but the car has to at least be assembled in the United States to get the deduction. But it's just kind of cool because it's promoting, I think, manufacturing in the United States, and it's a deduction I've never heard it on the table before.
All right. So take advantage of what you have, right?
Exactly.
Oh, okay.
If you can.
Yeah.
Charitable deductions.
Yep.
We talk about, are there changes with this bill on charitable deductions?
Yeah. So basically, what it was is for an individual, you can actually get a charitable contribution and get a deduction all the way up to $1,000 per person or $2,000 per household, right? And so that is actually an additional deduction on top of the standard deduction, okay? So that's an additional tax savings that you can do. And where that is really important is because you can help these nonprofit organizations right now who actually are in dire need of substantial funding, right? And so that's one way that you can also do it. But I do want to point up the concept of charitable contribution, qualified charitable contributions.
Okay.
That's basically when you take money out of an IRA because you have to for RMD purposes. But let's say you don't need it. And if you take that RMD, it's going to pop you into a higher tax bracket. Well, what we are able to accomplish for our clients is take that RMD amount that you don't need, pass it wholly to the nonprofit organization, satisfy your RMD requirement, but also not recognize that as income. So if you're on the precipice of jumping from the 12 to the 22% tax bracket because of RMDs, and you have a charitable heart, let's gift it. right? Keep you in the 12% tax bracket, lower your provisional income. All of these things are in play.
And the other piece of the puzzle is that the federal government and the state government isn't getting that full amount that you decide is going to be going to the qualified charitable deduction is going to the charity. It's bypassing tax. It's bypassing adding income to you. It's bypassing sending money to the federal government.
Yeah.
So it's and if you're going to make a contribution to a charity anyway, well, why give money to the government in the process? No, let's bypass that.
In the midst of this, here's trying to figure out what your taxes are, which is why we have NAFtaxtest.com. Scan the QR code on your screen, go to the website, get the idea, then make the phone call. Look, what we're talking about, you say, it's a lot. It is a lot. I don't know whether you have any interest in sitting down and reading all pages of this bill. It's been done for you. Conquering your retirement is easy at Northern Alliance Financial because they know the changes that are constantly coming with legislative risk. 877-241-7430. Would you like some help with people who know what they're doing and can understand what the bill is asking you and taking advantage of the options that are beneficial for you? 877-241-7430. Make the call now. Be right back.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Glad you're with us on Conquering Retirement. Brad Johansen with Lance and Blake, Northern Alliance Financial. We've been talking about the big, beautiful bill, the changes, the options, tip deductions. Yeah,
that's a new one too.
Yeah.
That's
There's a lot of new stuff.
A lot of buzz in the media about the whole tip deduction thing, but that's a huge change as well. Kind of going back to the automobile loan deductions. First time like we've heard that or seen that like blip up on the radar screen. But that's why it's so important that you're working with someone that's keeping pace with all of these changes that are happening legislatively, and they happen all the time. But the tip deduction is above the line deduction for food and beauty, hair. $25,000 you'll be able to deduct off the top as a result of what you've earned for tips. And that's a huge deal, $25,000 just off the top from taxation. First time it's ever happened. So again, ways to put more money in your pocket, not the government's.
Yeah, the options are significant, and if you're able to take advantage, but knowing the rules is what it is. How does this work into putting together this comprehensive plan? I think for a lot of people, it's I'm going to drop my portfolio on your desk. Can you tell me what to do? And I heard you guys talking about the big, beautiful bill. I don't know which of these options. Take people through what coming in is, because we continue to ask you to take the test, go on to NAFtaxtest.com, and it probably raises some questions. How do I create a strategy? Well, I've had an advisor tell me about building all of this up, and now I've got this in front of me. Like, take me through what people coming into the office are facing, because it's daunting for a lot of them to walk in and say, you know what, I need a second opinion. I've had somebody, I haven't talked to them in a while, and this is new for me, and all of these things are new for me. It's complicated, and I don't want to feel stupid walking in and saying this is what I have. Give me an idea how to ease their mind on something like this.
So the great thing about our first meeting when you come in is we are intentionally trying to figure out who you are, what you're trying to accomplish, what your current fears are. And we are also going to go through the balance sheet side of things. We want to know, hey, what are you working with? What do you have for resources? Do you own your house? Do you own a camp? Do you have IRAs, 401ks? What's your budget? Have you taken a look at your Social Security benefit, and what will that be at your full retirement age? And in this process, we're constantly listening. We're just asking questions. You're telling us your story, what you're wanting to do, and we just listen. And during this process, we're going to probably be asking you questions that maybe your other financial advisor has never asked you, right? Like, what's your bucket list dream vacation? Fun things for you to get excited about. What do you want retirement to look like? And then what we do is we compile all this information and bring new things to light. And then we come back in with, on the second meeting with potentially a formalized plan. But the way that I love starting my second meetings is, hey, I know we covered a lot last time. Do you have any thoughts, questions, or concerns about what we talked about last time? And then we're like, oh yeah, you made mention about this. I want to know a little bit more about this. Be like, hey, I've already got it planned for you. So it's those things that we're always trying to stay on top of and keep ahead of.
This is with your big red binder that you put everything together for everybody. It becomes their plan. I got it right here.
Yeah, and the beauty about the personal financial plan is that once it's built, it ever evolves, Brad.
Yeah.
It's one of the things that will always change, because guess what? They will change the laws. Something will change in your life. And change is the only constant that we can guarantee. So this is not just a built plan, but it's a living plan.
Yeah.
Mm-hmm.
And every time that there's a change, whether it be in the law or in your personal circumstance, the plan will change.
And you want somebody that can change with it. 877-241-7430 for your complimentary written financial plan. As Lance said, it is a living financial plan because life changes. And you have to have somebody who has a personal relationship with your financial plan that can adjust to the changes in your life. It's time. Make the call. 877-241-7430 for your complimentary written financial plan. We said it, time's your greatest asset. Use it. Make the call. We'll see you back here next time.